Hello, everybody. This is Brett Gelfand, founder of CCA and Cannabiz Collects. I'm super excited because today, to kick off the You Owe Me series, I've got Jared Angell. I've known Jared for a while now, just through the industry during my previous cannabis packaging days. And I think I knew Jared when he was CFO of Think Distribution. And now Jared is the director of business development over there at Distru, pretty much leading the way for cannabis ERP systems. So we are going to get into that and some more. But without further ado, Jared, what's up, man? How are you?
Thanks for having me, Brett. I'm doing great, man. It's good to see you again. I don't get to see you frequently enough since I haven't been at enough events with you recently.
I know it's wild because I try to think back when we originally connected, and it's hard to put the pieces to the puzzle. I just remember trying to sell you guys pre-roll packaging, and you liked it, but I don't know if we ever would have moved the needle enough when you were running Think. What? Tell me, can we go back a little bit around the Think days and what you're doing then, just so I can even kind of remember those times when we originally connected?
Yeah, for sure. So back in like 2018, I partnered up with a good friend of mine to open up a manufacturing and distribution facility in San Diego. And yeah, we specialized in making pre-rolls. We did a lot of white label work as well. So that's where we connected when you were at Pack Case. And honestly, I loved the product and I really wanted to do it, but our business model was trying to be the most cost-effective pre-roll out there at the time. And unfortunately, the packaging did not help with that. It was phenomenal, but we just couldn't make the numbers quite work. But I will say, I do actually have. We still did end up doing business because I have Distru branded pack cases.
No
So
way. That's amazing. I love
yeah,
it. Throwing it back. I think it's pretty fascinating because I don't know if that was back in 2020 or 2021, maybe around then is when we were talking, but at least for me, that was when the I'll call it a light bulb, but more of like the fog or the clouds came, at least through my career, that it was a perfect example. You love the product. We were selling a lot of high end packaging, and we realized that the market just couldn't sustain paying for higher end goods. And my other business, at the time, Cannabis Collects was getting really busy. A lot of people were submitting accounts to collections. And that's where I kind of realized I should probably get out of the premium packaging space and focus in collections. And just like that exact example, it was kind of a race to the bottom back then. And we're still kind of seeing that a little bit. No, like it's still kind of happening. Everyone's trying to buy the cheapest product they can, at least from a packaging standpoint, right?
yeah. I mean, in general, yes. There's obviously premium brands that want the premium packaging and command the premium price. But yeah, I agree. I think consumers are more often than not looking for the best deal. You obviously have the connoisseurs that are going to pay 80 bucks an eighth or whatever it might be in your market. But yeah, man, in general, across the nation, I have seen some really wicked price compression in some markets where pounds are going for like a third of what they were at the high point, and it's tough out there.
Yeah, yeah. We're gonna dive all into this, and obviously this show and series is really gonna be focused around some of these issues. It's not the sexiest part about the business, but really shedding light around what problems are coming about and how different leading brands and operators are tackling those issues. So before we touch on all those things, I'll plug that for later. I still don't really understand, how do you go from CFO at Think and then go into director of business development at Distru? Most people I know are either like finance wizards or they're like sales extraordinaires. Are you just a superpower at both, or tell me about kind of how you made that transition, because it's a
Sure.
novel one at least.
Yeah, I would say jack of all trades, master of none kind of thing. So yeah, I think I was our CFO, which I was talking to someone yesterday, and the way I phrase it is, that's the hat that was on top of all of the other hats that like was the easiest way to define what I did. But I mean, at Think, I managed all of the purchasing we did from other vendors because we didn't grow. So sourcing all of our product, I managed our sales team. I dabbled quite a bit in operations, helped out with SOPs, refined our pre-roll making process to make it as lean as possible. So yeah, just touched on basically all aspects of the business when I was there. And then I moved up to LA in March of 22 to go back to school. So I went back to USC and got my MBA. And as I was moving up here, I had become friends with Blaine, the CEO of Distru, because I was one of, I don't know what number customer I was when I joined Distru, but let's call it like first 10, first 20, whatever, one of the original customers. And so he was actually the person that onboarded me back then.
Wow.
So I got to know him during that process. He's really, really smart guy. And so, yeah, stayed in touch with him, floated some different ideas to him about like, hey, it'd be really cool if Distru did this. Why aren't you guys doing some other things? Those kinds of, questions. And then when I was moving up to LA, I just said, hey, like I'm moving up to LA. I'm not sure. I might be looking for a new position. And he said, cool. Like, what do you want to do at Distru? Not quite that easy, but yeah. And once we got to talking, he said, being an account manager at Distru is something that we don't currently have. So when I joined Distru, I started as the sole account manager for our hundreds of customers, built out the department, hired a couple other people. And then, yeah, after doing that for a while, it made sense for me to try something new. And so moved into director of business development, which is, a very generic title to say the least. So yeah, the things that I currently focus on are integrations with other partners, referral partners. I manage our SDR team and I manage our events. And then, with doing business development, I touch into marketing quite a bit, especially with co-marketing with partners and other things like that.
Wow. Yeah, it's a very dynamic characteristic you have, I guess. You got the finance background and then now really running full revenue, it looks like, generation on the Distru side. So you're perfect person that I wanted to talk to because you've seen the whole supply chain, it looks like, that's happening in this industry. But, before we get into that, tell us a little bit more about really where Distru plays in the industry today for people that might not be familiar with Distru and what you guys are working on tackling in this industry.
Yeah, 100%. So we're the leading ERP for cultivators, manufacturers, and distributors throughout the U.S. We've got integrations with Metric, LeafLink, QuickBooks, Dutchie, Trees, Blaze. We've got a pretty solid stack of integrations. We're working on a lot more as well. Like BioTrack is something we should be coming out with pretty soon here. And yeah, so we support, I'd say, medium plus customers. We definitely have some smaller customers, but I would say our bread and butter is people in metric states that are currently on spreadsheets and looking for something to help streamline their entire operation, integrate with metrics, save a bunch of time there, as well as get all of the financial data into QuickBooks, manage your cost of goods sold, bill of materials, production planning, lots of different features. I don't want to feature dump on you, but yeah, those are the main ones at least.
So where does, I guess, the credit collection piece play in Distru? And are you supporting your customers when it comes to collections? Is that part of it? Is any kind of AR management piece, or where does the credit collection piece play directly into Distru's feature list or integrations or what have you?
Yeah, 100%. So yeah, we've got a few different things of how we help our customers manage AR. One is going to be, we have an outstanding balance threshold that you can set at a global level as well as at a company level. So Brett, if you got Cannabiz, your store, and I'm selling to you, I can set a threshold for, call it 20 grand, that once you're over 20 grand, I need to know that. And so if I sell you whatever, 15 grand, you don't pay me, you're on net 30. I don't ask you for the money when you order 2 weeks again later, and I send you another 10 grand. Now you're above that $20,000 threshold. And when you ask me another week later and you still haven't paid, and you're like, hey, can I get another order? When I go in to input that order, it's going to pop up and say, this guy's already over his amount, and warn the sales rep, right? So I think that that's a pretty solid one that will help people out in terms of managing their AR. Another one we have and that we've seen people use is we have relationship types on the company level. So you might have, 5+ store chain, 3 to 5 and 1 to 3. And then you can also have, these are all custom relationship types you can make, of course. You could have one that says at risk. So that way, all of your accounts that are not paying you, you can flag as being at risk. And then another one is just, being able to send automated reports to both your accounting and sales team on whatever cadence you'd like, to show outstanding balances, do an AR aging report for them, show when the due dates are, those types of things. And then last but not least, which, I don't think I've told you this yet, but we are working on a CCA specific report that is in the format that you love, that we can then just either send directly to you or pass back to our customer to send to you.
Awesome. Yeah, that's going to be very helpful for our members that are already part of Distru's network. So yeah, we're stoked about that, and I think it's really exciting for me. I mean, for the last 8 years, I've woken up every morning trying to tackle this problem of credit collections, and people call me crazy for doing that because it doesn't seem like the most fun thing in the world to do. But it was just an absolute avalanche that was coming, and now most people that I speak with, including yourself, are looking for ways to support billing, to support AR, to support credit risk. And it's just become kind of it's in everyone's faces now. So, I mean, when was the first time that you faced your own problems with collections? Was this purely at Distru? Was this something that you faced at Think? Was this before that? I mean, when did you, and specifically to cannabis, but when did you actually face some initial issues when it comes to being, paid late and not being paid at all, maybe?
Yeah. I mean, definitely something I've encountered here at Distru. But first time was definitely when we were at Think. There was, handful of retailers that you'd send product to. It was sometimes as low as 2,500. Sometimes it was upwards of 80 grand that was amassed. Just depends on the size of the retailer. And I think that's where we first started doing business together was we tried on Pat Case, and then you're like, hey, by the way, do you have any problems with collections? As I was sitting there at my computer looking at a whole list of AR that I needed to figure out how to magically get in touch with, not the purchaser, but the COO or the CFO, because the purchaser doesn't control the payments or whatever, So yeah, when we connected, I think you guys sent out a few demand letters for us. I know that we had one that came back with, I think it was like 60, 70 grand that you guys helped us out with. And then I think there were some smaller ones too, like the 10,000 or less kind of thing, where demand letters were successful that you guys sent out. Yeah, and I would say just another tidbit is that before you and I had started talking about it, we did have legal counsel that we were sending letters to, and it was like $1,000 a letter, which now you're throwing good money after bad. And hey, if someone's not going to respond to you and they're going to stiff you, it is what it is. That was a big benefit of working with you guys, is it was on a contingency basis. So hey, there were a few that I know that we sent out letters for that they may not have worked, but like I also didn't have to incur any cost on it.
I was going to ask you kind of like your own evolution of credit collection policy from the beginning stages to where you are now. Because when I was in the early stages myself pitching, hey, work with Cannabiz Collects as the industry's first cannabis collection agency, people didn't know what a collection agency was. They didn't understand contingency fees. They didn't understand really the purpose. And I heard a lot, either people not wanting to hurt their reputation, people not wanting to give up a margin on their sale, even though they didn't collect any money up front. So it was a learning curve. Can you walk me through kind of like where you started when it comes to a credit collection policy, maybe at Think, to like, let's say you were going to develop it now, where that would go for today? Like, what were you doing in the early stages when someone asked for terms? And what kind of policies did you have if someone went past due? Or was it just kind of the Wild West and there was none?
Great question. Unfortunately, the latter, meaning that, hey man, when we first got started, it's like, who will buy my product? Cool. You need net 15? Done. You need net 30? Done. It's like, we just need to move product. We need to move revenue. We got bills to pay. We got rent. We got staff. We just need income. So yeah, in the beginning, it was definitely the Wild West, and like, hey, we just need to make sales as quickly as possible. And the collections part wasn't a big deal in the beginning. I'm sure many operators can relate to that, especially when they're first starting out, especially in newer markets. Like you're just trying to get started. You're just trying to get the boat floating, So then I would say probably a year or two in is where we started to have some issues in the California market, some price concession, those types of things. And so when we saw those things start to occur, we were just looking on like an account by account basis. Hey, how much do we have out at a time? If we get stiffed on this, are we dead? Or how much trouble are we in, of course, right? And that kind of sort of worked when we didn't have that many accounts. But the more staff we brought, the more sales reps we brought on, the more accounts we got into, the more we needed to be able to scale with that type of solution, right? So we still hadn't come up with an organized way to really do it. So a solution that we came up with, which I will say helped somewhat, but didn't really fix the problem, was we actually made it so that our reps would only get their commission when we were paying, and we would prorate their commission. So if you get half down, half net 30, you're going to get half your commission when it's time for your paycheck, and the other net 30 you're going to get paid on later. Like I said, that helped. That was nice. But the reality is our sales reps, like, if they didn't collect the money, they didn't get paid, but they also didn't lose the $10,000 of product that they just dropped off and the associated profit with it, right? So like, hey, did it help? Sure. Did it solve the problem? Absolutely not. So then we eventually, once I was not necessarily boots on the ground selling, I was only handling more of the larger accounts and then managing our sales team. That's when I started to put the CFO hat back on, and was really just looking at AR, seeing how overdue people were. And I would say, sadly, it did vary by account because, again, we needed revenue and we did have to be flexible. So I'm sure as many people know, net 30 really means net 45, net 60, whatever it might be. And so, during that time, we really had to tighten the belt a bit and say, hey, retailer, your net 30 is due. They said, hey, I won't have the money for 2 more weeks. Can I get an order? And we'd have to start negotiating. Hey, I'll give you an order. You can have that order on net 30, but I need 50% down either on that order, or you need to pay off half of the first order. From my perspective, whichever was the larger amount is the one that I was probably going to propose. So that definitely helped as well. But I think a really important part is having a good relationship with the retailer and being able to work with them. Working with the retailer, if you don't have a good relationship, sounds nice. But the reality is, if you have a good relationship with the purchaser who doesn't handle the payments, it doesn't matter. So now you got to get deeper and you need to go be friends with the CFO. You got to go meet that person, CEO, whoever it is that's actually handling that kind of thing, and make sure that you're prioritized.
And this, we're talking here all Think days, or is this like happening at Distru too? Like, I mean, what's Distru's AR kind of issues today, or is this mostly Think because Distru's more of the middleman now, really as an ERP system? Kind of walk us through that a little bit so we know exactly kind of if you're talking mostly Think, or is this also still happening at Distru?
Sure. So everything that I was just talking about is related to Think when I was an operator. On the Distru side, I mean, look, man, we're here to help customers. That's ultimately what we're here for. We want to help the industry and we want to help people be successful in it. So like, look, can you get on Distru and not pay for 90 days? No, it doesn't work that way. We also need to be paid. But the reality is, especially in markets that are not doing so well, there are some operators where it's like, hey, I can't make my payment this month. Can I have an extra 15 days? We'll get on with them. We'll talk about it. And we do our best to be flexible. But at the end of the day, look, everyone's in business here. We all need to get paid. And so that's a benefit that we like to provide to our customers, is like, we want them to get paid because that's money that they pay to us. Right. And honestly, Brett, that's one of the reasons that I was so excited for you to form the CCA, because I really believe in the mission that you guys have. And having dealt with these problems myself as an operator, I'm a very firm believer in, doing some, sharing of data, crowdsourcing, however you want to phrase it, to really provide visibility into the industry. Who are the people that are not paying their bills? You don't want to be the guy that got suckered into I got a $20,000 order from this huge chain. 15 days later, they're like, hey, I sold through, but my payment cycles are on 30 days. Can you send me 60 grand of product? You're like, yes, I now have 80 grand. I've sold this large retailer. It's going to be amazing. Yeah. And then 30 days later, you're like, hey, how's it going? Where's my money? Nope. You're not hearing
Right.
from them. They're not doing anything. And now you're sitting there saying, hey, I have 80 grand in the hole. Like, that's my payroll. What am I going to do? That's
Right.
that's really what we're trying to help people avoid as much as possible with those different features I previously mentioned.
Yeah, it's fascinating because when I was in Colorado running, the cannabis company when I got started in this whole thing, it was, you know, let's extend credit terms. One of the first ones in the state to extend terms. This was back in 2015 to have an advantage against some of the Metro Denver Boulder grows, and we crushed it. Like we were blowing product out because who doesn't want to pay us back in 30 days? No one did. No one ended up paying us, and it became this whole evolution of where we are today. But I wanted to ask you because you were there pretty recently, and you're still seeing it every day with Distru, and you guys play in how many markets now? Are you guys in?
I would just say
Um,
all of the states, man. It's
Dozens. We'll put dozens. So
dozen
you guys
is
are
the very fair yes.
you're in dozens of markets. The thing that I struggle with, and it hurts when I hear either members telling me this or clients of Cannabis Collects. It's like, Brett, I don't have an option. Like, thanks for presenting this data to us, and thank you so much for showing me who might not pay me, but I don't know what to do because I don't have anyone else to sell the product to. What would you say, Jared, to somebody like that might not be the biggest brand, has a decent product, and the retailer is essentially cornering them saying, you know, you either sell me product on a free loan or take a hike. What do you do?
Yeah, I've been there. It's tough. I mean, I will say the one major stipulation is like, look, every market has enough stores for you to sell into, right? Realistically, might they be 4 hours away in Aspen or whatever, and you got to go along? I forget the name of the number of the highway, but whatever that highway is that sucks that I got stuck and had to do a 5 hour detour, like things like that. Look, it may not be a convenient person. They may not be paying you as much. They might give you worse terms, but they pay. Going with somebody that's actually going to pay you, even if you have less margin, even if you have higher costs to get there, at least you have a higher certainty of getting your money back. And that is very, very key for success. Retailers that just say, hey, I need net 30 terms, and they want to order 10 grand, tell them, hey, I can't do net 30 for 10 grand. Let's do net 30 for 5. If you guys sell through it and you pay me, let's bump it up to 10. Then I got no problem. So I'd say another option is maybe starting a bit smaller and then still providing those terms. Another potential solution would be just trying to get down 50%, 25%. Get something. If you can at least make sure that, if everybody's keystoning and you're doing that 100% markup and you get 50%, in theory, you've now at least covered your costs. I don't think in general we live in that world anymore where people or brands and distributors are able to keystone successfully. I think price compression's affected that way too much now. But yeah, I would say try to maximize your down payment to therefore limit your exposure on the back end is another really good way to go about it.
I love what you said, especially on the side of like you really have to choose your customers wisely and don't just chase the dollars. And we've proven that doesn't work. I mean, if you look at the industry the last couple of years and seeing all these companies go out of business so fast, you just have to make sure you're working with the right people. It's easier said than done. And also, I see all the time people are like, just extend COD or don't extend terms, just go COD. That's also reasonably not feasible. A lot of these retailers are expecting terms, and you have to find a way to negotiate. And I think that we haven't had enough emphasis in this industry yet because there's limited resources. It's young, sophistication's coming, but people don't have full credit management teams and collection teams and people to spend time on an SOP process of like, what do you do and what do you say when a retailer asks for terms, right? So I think we're getting there, just like we got there in the collection world. I think one really important question I wanted to ask you, and I think about this all the time, is do you think the majority of retailers that are late on payment are doing it intentionally and they're bad people, or they don't have the money to pay? If you had to put a percentage on the ones that are bad actors versus the ones that just can't do it and they got into a tough financial situation because of economics, where would you rate those?
Man, I'm an eternal optimist, and I always like to believe the best in people. So I was hoping you wouldn't ask for me to quantify that for you. Um, Man, I can only say from my experience and what I've heard, um, without giving a specific number, I would say the majority are not intentional. Malicious or not, that's where we're going to get into some debates about what's malicious, what's not. I think a good example of that would be I'm aware of a chain that they I'm trying they did not pay us for a very long period of time. They did end up paying us. I think maybe our products are still in their store. Honestly, I don't even know. I'm not part of my own company anymore. But basically, my understanding is they were taking product, they were selling product, they were turning net 30 into net 90, assuming that they paid you. They were renegotiating and saying, oh, your product didn't sell as fast. We had to put it on special. And like, hey, now you need to eat all of this cut, right? Whether or not they put it on special, I don't know. That's obviously very hard to see. Unless it's live, you go on Weed Maps or Jane or Leafly or whatever and you see it. You're not going to historically be able to track that unless you ask them to open up your books, which, like, good luck with asking a retailer to share that data with you. So anyway, the chain that I'm thinking about, they expanded incredibly rapid, and they were doing, probably $1 million store build outs, opening one store probably a quarter, maybe more than a quarter, and just honestly not paying the vendors. And so my understanding is they were using all of that capital of not paying back vendors and just converting that into expanding their business. So there are things like that that happen. It's tough. I would say, again, going back to the eternal optimist in me, I think a lot of the payments are probably the lack of payments or paying late or not paying is probably more so like cash flow mismanagement on their end, and just not being able to pay vendors and not understanding, hey, I have a $10,000 bill that's due in a month. I'm still sitting on almost all of their inventory. I'm not selling it. I'm not putting it on BOGO. I'm not promoting it. I'm not spiffing my bud tenders, like none of that. And so the product just sits there. And then they're going to say, hey, your product's not selling. And I will say, though, there is a degree of your sales team needing to get in there and be looking at the inventory, both physically as well as establishing that relationship with the purchasing manager or inventory manager, whatever, to see how much of my inventory do you have left? It's been 2 weeks. How's it going? Oh, you haven't sold any of it. Do I need to come bring you some free pre-rolls to start moving those eights that I sold you? How can we work this out? So I would say just really just having that relationship with the store on both a salesperson level and preferably, especially as you talk about larger chains, having an executive presence in there as well. So having someone in the C-suite, founder, sales director, manager, whatever you want to call them, just above the salesperson, know the ownership and or founders or the people that are running the company there is also very helpful.
I really like that approach, utilizing your sales team to kind of have visibility on how much product is there and kind of helping with supply chain issues with the retailers themselves, because a lot of them don't have supply chain managers and those type of executives at these retail levels to make the best decisions. They might order the wrong product. I think it's a really good use of time and relationship management with the sales reps. I think it's a great idea. I know you mentioned before that you actually kind of compensated your sales reps based on collections, which is a whole different topic. And I've got strong views about this because I did it myself, and I don't think it's the best strategy, especially as the teams are being built and your sales rep should be focused on selling and you should have an AR team to focus on receivables. However, you were there, I was there, I did the same thing. I didn't have an AR team and we needed all hands on deck and to get money collected. So even understanding how are you going to compartmentalize your team, who's doing what, and who are professionals at building relationships and bringing product in the door, and who are really good at collecting money and AR and saving those people time, from dealing with the BS and old money, bad money. That's really where you have to create that delineation in your sales team versus your AR team. But it's cool to see your sales reps going in there and kind of helping mitigate that risk themselves. And I think another thing about risk mitigation is on the same topic of not being sure who's intentionally bad or who just doesn't have the means to pay, how, from your experience, how do you think cannabis operators can make those decisions? Obviously, the CCA is here to help provide some tools and insights, but let's say with CCA in mind, how is a cannabis company supposed to decide who to extend credit to and how much right now with the resources we have available today?
Sure. Yeah, I mean, I think the data that you guys are aggregating obviously is a major determinant. If you're looking at a store and you see that there's no AR data associated with them in your platform, hey, they're probably good. You know, if you look at them and you see that there's 30 vendors that have all things that are, net 30 that are 90 days past due, maybe don't sell to them. Or, I mean, again, let's live in reality, because the maybe don't sell to them part may not be a reality. You gotta go for that 50% down or whatever percent you can get down. Start with that smaller order on net 15, net 30. Make them prove that they'll pay you on time, and then bounce up to where they need to be. I understand that, hey, if you got to go drop something off every 2 weeks for 2 months, you're definitely going to incur more costs. But honestly, I would rather incur $1,000 more in cost per order, which I think is a high estimate. But even if we're incurring $1,000 more per order, if I'm getting paid, at least I'm getting paid. And you know what? If we can build up to be where the retailer wants to be, awesome. But I think we both need to prove that, one, my product is that I say what it is, and it sells. If I do my job and you pay me, awesome. Let's keep going.
Right. I know we're talking a lot about retailers only too, but this obviously is a domino effect that, we have a ton of ancillary members and clients that are owed money from the cultivators, and it just keeps trickling down. So totally agree that there needs to be some sort of process that you have, even if it's the most basic outline of how do you establish a credit policy? What does credit policy mean for your organization? If you could answer that, you're ahead of probably 90% of the industry. What does that mean for you, Jared? I mean, do you see a lot of cannabis companies or friends you have in the industry checking credit references? Do you see them filling out credit applications? Like, other than just on a case by case basis, kind of figuring it out, have you seen, at least this year, people doing anything maybe the more traditional way that another group would if they were going to extend net terms?
Yeah, so I mean, when I was still an operator, we did have a onboarding application that we came out with, or what was it? Yeah, basically like application for us to sell to you kind of thing. It had trade references, we needed your EIN, all of those types of things that you would normally need to be able to sell to anyone, regardless of the industry. Candidly, people don't want to fill it out. There's somebody else that can sell them your product. Now, I will say that brand presence and brand strength are something very major to consider. If you're a monster brand in the state and people and consumers are going into stores and they are asking for your product, dude, shoot them over the application. If they want your product on the shelf that bad, they're going to fill it out, right? Unfortunately, that was not a world that I was able to live in. So yeah, it's tough.
And I think that story translates to most brands. They don't feel like they can get a credit application filled out. Many of them don't have, I've seen people extend $50,000, $100,000, and I tell them, get a personal guarantee signed. That's the best thing that you can do. No way. They laugh at me. There's no way I can get a personal guarantee signed. And
I just did. Sorry.
Yeah.
I'll tell you
Did you?
Hell no. Yeah. Even I will say this. Like I got like a $500,000 line of credit for our company, and like I didn't want to PG that. Like nobody wants to throw out a personal guarantee, and especially if we're talking about like, hey, for me at least, as as a former business owner, when I was there, it's like, hey, do I want to guarantee $200,000 that I just pulled from my line of credit, and then my facility gets set on fire, or God knows whatever else happens? Like, no, I don't. Like, I can't afford that, man. So yeah, I just don't think we live in the world of PGs for especially So that was on my side. And like, I would argue that I had more control over the business and whatnot. But let's just use the retailer as an example. Dude, if you say that you have this really fire flower pre-roll concentrate, whatever it is, and I sign this PG and it gets to my store and it's old, it's it's 4 months old, it's oxidizing, all of the packaging is all wonky with the labeling, like whatever it is. Now I'm on the hook to pay you back 100 grand for shit that you delivered me. Like no, like
Yeah.
it's yeah. I
That's
just
a good point.
unfortunately, yeah,
Yeah.
I don't think we live in the world yet where I would say we don't live in the world yet where we can operate like normal businesses, if you will. And I think that there's a few solutions to that. I believe I heard that New York is going to or already has implemented that they're going to treat cannabis retailers like alcohol sellers or retailers, whatever, in that, hey, if you don't pay your bills on time, like the government or the state rather, will come in and yank your license or suspend it or force you to pay or whatever it might be. But again, here in California, that is not a reality we live in any way, shape, or form. So unfortunately, there are, not only retailers, I don't want to continue to pick on them. I just think that that's more of where this is probably coming from, is that, yeah, they just don't pay. And like your only recourse is send them a demand letter. Okay, they didn't respond. Sue them. Hey, if it's 10 grand and you try to bring them to small claims court, like how long is it going to take you to get that back? Right. And if it's a larger amount and now you need to go to big boy court for it, how much are you going to pay in attorney's fees? Or in your case, how much would you be, sacrificing on the contingency basis, right?
Right. Yeah, it's tricky. And I think it goes both ways. I do think that there's a responsibility for anybody extending credit to act like a bank, the same way that you said you didn't want to sign a personal guarantee. I mean, which bank can you go to and get even $10,000 handed over to you from a bank without signing documents and a PG? I mean, almost all the time they're going to ask you to sign a personal guarantee.
And no interest either, right?
Yeah, right. Yeah.
And by the way, I would say that's another potential tip is if you're really concerned about getting your AR paid back, you can, in theory, shrink your margin down and give them a COD price break. And I think especially for larger retailers, that can look really nice, especially if you're at that type of scale where, hey, getting 10% off for $100,000 and saving that 10 grand, the cost of capital on both the brand or distro side, as well as the cost of capital on the retail side, like they're astronomically high, way higher than other industries. So like taking that haircut to make sure you get paid to then have that cash flow, as opposed to, hey man, I got to go and borrow 90 grand because I couldn't go and get it back. And my cost of capital is, 2-3% per month. They don't pay me for 3 months. Now I'm in the hole.
It's a great point. And giving discounts on timely payments is something that I rarely see in this industry. And it's something so standard outside of it, especially on a COD basis, because I think we all lose track of the minute you extend credit terms, trade credit, you are acting like a bank. And you're taking that risk on, and you're taking that risk on for companies, retailers, non-retailers, anyone in this industry that's only been around for a few years, on a company that's very young, that doesn't have the highest level of sophistication. You're not making decisions backed by data or any kind of credit worthiness. We all have someone to blame. And I think right now everyone's looking at, let's see if the state government agencies can help us with this. And maybe they will. It's funny, in the beginning stages of Colorado, when we were starting our Colorado cannabis business and they would come down and chop down all of our plants, we wanted the MED out of our lives. And now when people are owed money, everyone's asking for the state boards to get involved. Everyone just wants help when they can. And I personally don't believe we can just wait and trust that, the state agencies can do business for us. I think we have to be smart and make those decisions. And I think this conversation is really enlightening of what other things can you do, right? If someone doesn't want to pay, if you don't want to extend net 30, well, are you willing to negotiate and give, 10% break for someone to take net 10 or COD? I mean, there's all kinds of ways to skin the cat. I think the biggest issue is without having those things documented and just having them in your brain, it's almost too much energy every single time you get a new customer to figure out what you're going to do. And we're really working towards and trying to figure out with our clients and members, like, how do we help people make easy decisions that, because they don't have time for this. No one's really thinking about this, right? Like the fact that
Yeah.
you're even on a series with me on video talking just credit collections is it's kind of odd, right? It's not a very like hot topic. However, tell me if I'm wrong. I think it's the number one reason why companies are going out of business today. And you can challenge me for that, but like
Yeah.
I think it's the number one reason for cannabis companies not to survive is poor cash flow management.
I'm going to partially agree with you. I won't necessarily challenge you, but I will add to it, which is
Okay.
I think 280E is a monster that people do talk about, but I feel like it's more of like the CFOs, larger company execs that are like have their own accounting team that are actually doing their taxes and whatnot. And they see, man, I sold $1 million worth of product. I had COGS COGS of 500, additional expenses of 500. I broke even for the year. Awesome. Tax time comes and it's like $1 million minus the 500 in COGS. And you're sitting there with $500,000 of net revenue that now you got to pay 30% on. And I just went from break even in reality to the government doesn't recognize me as as a legal entity to that extent. I'm hit by 280 and now I'm in the hole 150 grand. So I think the combination of the two is very powerful and hitting.
1000%. Mixed with, at least when I was in the Colorado market, I didn't feel like a majority of those cannabis companies, retailers, really throughout the supply chain, had enough financial experience. I mean, I was 24 years old when I was in Colorado, promoted to CEO, and I had a business degree from the University of Georgia, and I was running the projections and ran and raised $20 million. I was completely not, experienced to that level to do any of that, to raise that kind of money. And I saw that I was maybe one of the only ones out there that had a business degree at the time, where that is very tricky to run in an atmosphere of 280E, really, really complex tax hurdles, and manage a business that's brand new with new products in a new market, in new markets that are coming out every day, and trying to play that game without having a really seasoned finance department. I mean, dude, like, what do you think is gonna happen? And I don't blame anyone because everyone, it's a great industry. Everyone is behind the plan. I think there's a big motive to make this work. However, I think it's really important to have the right seats filled and know where you're headed if you're going to get in the game. Because just being a grower or just selling pot is not going to be enough to survive in a playing field that is playing against us, right? Like it's not really, and no one's really for us yet. We'll see what happens in the next couple of years, but hopefully that changes.
Yeah, 100%. Two other ideas or things that we previously either implemented, tried to implement, or somewhere in between. We're doing late fees. So like, hey, reverse of a COD discount is I give you net 30 for 10 grand. If you don't pay me on time, 10% late fee. We put that at the bottom of invoices. How successful were we on collecting on them? Let's not go there. But we did see an uptick in people wanting to pay us on time because they saw that the late fee was on there. They didn't want to pay it. And again, whether or not they were going to pay it is kind of irrelevant. But just the fact that they're like, oh shit, if I don't pay this, like there are penalties. The other one that we looked into that got complicated super fast is trying to charge interest. So it's charging interest, per DM, per month, per week, whatever time frame you want. The problem is like usurious interest rates and that you can't charge above a certain amount. And so I think the conclusion we came to and why we ended up going the late fee route is I think late fees, and I don't know if it was a federal law, state law, whatever, but it was like 10% was the max you could get, right? And I want to say on the interest on invoices, it was like, I don't know, 2% a month or I don't know, something like that, right? It's like, hey, 10% if you're late at all versus 2% per month means I need to get there for 5 months in a row, assuming non-compounded interest. Dude, like I can't wait 5 months to get my product back. And quite frankly, even with the 10% late fee, hey, if it's day 31, you're on net 30, you now get hit with a 10% late fee. What's your incentive to pay? You already got hit with the late fee. Why not draw it out to net 60, net 90, whatever it is? And so very quickly, your 10% late fee that you may or may not get paid on, probably the latter, is become stretched out over 3 months. And now you're looking at whatever, 3% per month of, interest, late fee, whatever you want to call it, capital back to you, which now you're back at your cost of capital for going and borrowing that money, assuming there's no origination fees or maintenance fees or anything else on the financing side. So yeah, it's tough.
That's a huge one, and every state's different. And because we are a collection agency, we have these conversations all the time. I would just say you should have your legal review on default language, and it's really important to get signatures either on the invoice or on an onboarding contract.
Good
because
call.
sometimes it's not enough just to have that on the invoice. However, those are things, even default language, like saying cost of collection and legal. If you're going to extend terms, you should have this somewhere with a signature from your client. If you're going to extend terms, at least get default language and late fees and speak to your attorney about the best way to do that, like the maximum interest rate or X, like so many different ways to skin the cat there. I'm glad that you guys are going that direction. And it's critical. I mean, it really is, because that plus what we're trying to do with CCA at least is, having, the CCA badge saying proudly reporting our AR to the CCA. We've seen that even doing something like that on your invoices shows these retailers, shows these companies, okay, yeah, I'm paying late. I don't really care about the late fee, or they're not going to really enforce it. But now that there's a group or a community that's going to have visibility into if I'm paying or not on time, that's our real focus, is to show that there's some kind of boundaries here. And I think we're starting to move the needle. It's going to take some time as we get more and more brands online, but critical aspects that you brought up, I'm glad you did. So thank you, Jared. Before we run out of time, man, I'm gonna ask you like one or two kind of zinger questions here, and then we'll wrap up. But I want to know, what's the wildest excuse you've ever heard for someone not paying?
Oh, it's funny. I was thinking of this story earlier, and I was like, you know what? We'll just leave that one. There was a store that we sold to that was a chain. I think it was like probably 3 to 5 stores, 3 to 5 store chain in California. We sold them product. I think it was like $7,500 worth or something like that. And we went to try and go collect it, and the phone number didn't work anymore for the purchaser. So we're like, what's going on here, right? So then we eventually we were able to get a hold of headquarters, and we talked to like the CFO, probably. I honestly don't even remember who it was, but an executive there. And we're like, hey, we sold to this store and they're not paying and we can't get a hold of them. And they're like, oh, yeah, they don't work there anymore. I was like, okay, cool. So who do I talk to get paid? And they're like, you need to talk to them. It's like, hold on. You just said they don't work for your company. How am I going to get paid from them? Like, are they going to pay me out of pocket? And he goes, yeah, they should. And I was like, hold on. Like, do you have some responsibility in this, right? Like, you hired that person. They didn't just like run into your store, get a new phone number and be like, hey, I'm taking over this store hostage. Like, I'm going to get as much product as I can and run with it. Like, no. So yeah, long story short, they just denied liability over it. We had to go and prove that we transferred product to them and that it was accepted into their metric, and go to them and be like, look, here's all the details. That's your employee. They signed for it. Your company still owes us money. Like, and I will say too, whether or not it's true, I still eternal optimist again. They said that employee went and stole a bunch of this inventory, right? So when I heard that, I was like, oh, so they stole from you. So like, are you pressing charges and are you suing them for all of that product? Never heard an answer back on that one.
It never got paid?
I don't think so. No.
Damn. Yeah, that's sad, man. All right. Well, yeah. Sad stories is what we like to do here on the Yomi podcast, but yeah, pretty good. And yeah, lastly, man, what's the vision that you guys have now at Distru? I know you guys and the team, I know you guys pretty well, always scheming up things. Just if you have anything that you guys are working on in the next, let's say 12 months that are exciting that you can drop, or just what your real vision is looking like in the future, what is that looking like for you?
Yeah, great question. Without giving away too much, we'll probably have some, probably 2 announcements here in the next 3 to 6 months. Can't say what type of announcements, but just large, very great announcements for us. We're very excited as a company where we're headed. Things are looking great here. We're continuing to grow. We're continuing to support our customers, constantly releasing new features that are quality of life features to make operators more efficient, make their lives easier, as well as we. I can't speak too much to some of the features that we're coming out with, but using BioTrack as an example, creating the best BioTrack integration in the ERP cannabis tech space is something that we're going to be launching fairly soon. And yeah, ultimately, Brett, what it comes down to is how can we best help our customers? If they're winning, I know that we're going to be winning.
Love it. Yeah, I think we're on that same mission there. I think that's a key part of some of the leaders in the industry today is they say that, but what do you really mean by it? And it's very intentional when you say it. So, Jared, thank you for being on the series here. It was fun, and I mean, I at least learned a ton. So hopefully, other members will do the same. And we'll be in touch soon, man. Thank you so much for being on.
Yeah, you got it. Thanks again for having me, Brett. It was a pleasure.
You got it. Bye bye.
Bye.